Good afternoon, everybody. Going to be our Summary of Markets episode 199. We're going to start off with this week's calendar. We're going to move into ES, NASDAQ, Bitcoin, Ethereum, and talk about some other futures as well. So starting off with this week's calendar, it's pretty active this week. Almost every single day has a major impact data point. So starting off with Monday, we have a 10-year bond auction that's going to be at 1 p.m. in the afternoon. These bond auctions have been quite active recently. We've been seeing a lot of volume and a lot of delta be traded on these auctions. So be very careful around that 1 p.m. But we have nothing around the open. So the open should be fairly safe. But the 1 p.m. will definitely have some action with the dollar and ES. So moving on to Tuesday, we have another bond auction at 1 p.m. But before that, we do have CPI data at 8:30 in the morning. So before the bell, we do have some high impact data. Make sure you keep an eye on the dollar. And then like we were saying in the afternoon, another one of those auctions. Moving on to Wednesday, we have PPI data coming out at 8:30. So that's going to be pre-market. If you guys are trading oil, make sure to watch out for the inventories at 10:30. And then on 2 p.m. in the afternoon, we have a FOMC. So FOMC meeting happening at 2 p.m. and press conference at 2:30. So the probabilities for a rate hike are basically zero. The market is almost guaranteeing that it will be a rate pause at 5.5%. So don't really think too much about if we're going to have a rate hike. Most likely there will not be one. Moving on to Thursday, we have core retail sales at 8:30, unemployment claims as well. And then moving on to 10 o'clock, we have business inventories. Finally, on Friday, we have the manufacturing index at 8:30, industrial production and cap rate at 9:15. And then finally, we have PMI data at 9:45. So as we said earlier, this is a very busy week. The biggest things to look out for will definitely be that FOMC meeting and those auctions. So watch out for the auctions at 1 p.m. on Monday and on Tuesday. All right, moving on to the analysis, starting off with ES here. So before we get started, make sure you guys are looking at the proper contract. If you guys are using TradingView, they have a continuous contract. So what we're looking at here is the newest contract, which is actually the H contract. So if we type in ES here, if we hit this little drop down arrow, the Z contract is the one that we were trading before today. That was the December contract. But moving forward, we will be on the H contract, which is the March contract. So if you're on TradingView, if you just type in ES and you click this one right here, it's going to give you what's called a continuous contract that will put you on the newest one, which is the H contract in this case. Okay, so because we are using the continuous contract, we have a rollover gap. So the rollover gap is actually, let me actually adjust this, it's slightly off here. It's going to be from the low of 45.86, all the way to 46.14. Now, originally, this gap was actually going higher to where it opened up on Thursday, but we have retested a portion of that gap. So this is the untested portion of that rollover gap. So once again, going from 46.14 all the way down to 45.86. Now, if we pull this up on the daily, you can see how obvious of a gap this is. Now, typically, the daily gaps are going to be filled within a week of them being created. If they are not filled in within a week, it's very hard to say when that gap is going to get filled in, but we can say with almost certainty that it will be filled in. There is a 100% fill-in rate of these gaps on the continuous contract if they can be seen on the daily, which in this case, this one can be. Okay, so we know for pretty much a 100% certainty that this gap will be filled in. It's just a matter of when. So typically, like we were saying, they are filled in within a week. So look for this to be filled in by Friday. Okay, now that we know that, let's go ahead and do our levels. 1, 2, 3, 4, 5. Going back to Sunday, we're going to grab last week's profile. Obviously, it's going to be a little strange because of the gap. All right, so we have the value area high trading at around 89. POC trading at 74. And the value area low trading at 65. Once again, it's a little skewed because of that rollover. All right, let's go ahead and grab some other value levels here. So we'll grab Friday's levels, which are the most recent. We already have Thursday. Let's go ahead and grab the low here. And that should be good to the downside. We do need some levels to the upside. So we are putting in a 2023 and almost a 2022, I believe. Well, 2022 was the all-time high. But this whole portion here, we have broken all of the highs. So the only high above us is the all-time high. Let's go ahead and zoom in to the all-time high here. All-time high is 48.08 in one tick. Let's go ahead and grab this previous high right here as well. And then one more thing we can do is if we zoom out a little bit, we can grab the volume profile of this entire accumulation here, or sorry, distribution. And we can also mark out some value levels from that distribution. So those are pretty much all the levels we can grab until the all-time high. If you wanted to get a level in between these two, you could grab the bottom of this doji right here. And that is pretty much it. We can't really grab any more levels from that all-time high. So let's go ahead and reset. We'll go back to the 30-minute. And now we have our breakout targets. So above Friday, we're going to look for 46.90, 47.13, and then 47.39. Those should be high enough for next week. To the downside, the number one level we want to watch is going to be that gap fill. So if we move this a little bit, we can see where that gap is coming from. So that is the number one level to watch. Is going to be 45.86. And then if we want to retrace last week's value, we could go down to 65, possibly even 48. And because we have so much data coming out next week, we can't really predict which way we're going to be pushing. We have to wait for all that data. So to start us off on Monday, we have that bond auction in the afternoon. So by Tuesday, we should have a general idea of where the market is trying to go, but we can't rely on that because we have the FOMC on Wednesday and so much more data after that. So don't fall into the trap of trying to pick a trend really early this week because we have so much data. You have to take it day by day. All right, let's go ahead and move on to NASDAQ. We're going to go ahead and just delete all of our levels on NASDAQ because of the rollover. A lot of those levels are not going to be valid anymore. Okay, so first things first, we want to grab that gap. So that's the remaining portion of the NASDAQ rollover gap. And then next up, we want to grab our weekly. So 1, 2, 3, 4, 5. I'm going to go a little bit faster since you guys already know how to do this. Okay, now we need some other levels here on the intradays. We're going to grab last week's low as well, which is way back here. And that should be good to the downside. Now, once again, we have to go to the daily, and we have to go grab the levels to the upside. So if you guys remember, I think it was like 2 weeks ago, we were talking about how we were so much closer to the all-time high than people really realized on NASDAQ. And this is kind of exactly what I was talking about. We are almost there already. We could be all-time high by Wednesday. We could have a couple of good days here and be all-time high. So be prepared for that. That all-time high is 16,767 and 50.50. Let's go ahead and grab all our levels here. We'll do the same thing we did on ES. We're going to grab this distribution range. We're actually sitting right on top of the POC right now, almost to the actual, like, literal point. So we are on that POC for the distribution here. And really, that's all the levels we can grab. So there are not many levels left to the upside here. You can see we're already breaking that old value area low there. So we can go ahead and delete that. We're sitting on that POC there. So if we break out of that, here is that distribution range high, or value area high, I should say. And then we have the all-time high right here. Let's go ahead and mark that out as an all-time high. So we are very, very close. How many points away are we? We are a little bit less than 500 points, which sounds like a lot, but that's less than 3%. With the kind of news that we have coming out this week, we could do that in 1 or 2 days. So keep an eye on that. Same thing we said about ES. You have to take it day by day. There's just way too much data coming out. So just look at it day by day. Don't determine your trade plan and have a bias going for the entire week, because they will catch you off guard. To the downside, same thing we said about ES. Number one level to watch is the gap fill. In this case, it is around 16,000 even. And then we have last week's value. And then finally, we have the low of last week. All right, moving on to Bitcoin and Ethereum. They were going crazy this week, or the last 2 weeks, I should say. This week, they kind of consolidated. But we finally broke out of that vertical distribution. So if you guys remember the last few summary markets videos that we did, we talked about how these vertical distributions for crypto are actually very bullish. Typically patterns like this on stocks or like futures, they're actually leaning bearish, but on crypto, they're one of the most bullish patterns you can have. It's very strange, but this is exactly what we were talking about. You can see that momentum just blasting out of that vertical distribution. So our previous levels that we were looking at were around 43,000 and what is that level there? 44,000, and we have one around 45.8. So to the upside, we want to look for 45,800. I don't think I have any levels. We don't have any levels above that. So let's go ahead and get that started here. The main level above would be this high right here. In this case, that is 48,200. Then we have this little cluster of highs right here, which would be 52,000. So realistically, this is on a weekly chart, obviously, so we're looking at this long term. But realistically, there's not a whole lot of resistance above you, except for these two major highs. So one around 48 and one around 52. And then we start getting into a lot of value resistance. You can see we were struggling quite a bit on this all-time high area. So anywhere from that 52,000 to basically all-time high, there's a lot of value resistance in that zone. But in these two areas here, not a whole lot of value resistance there. So we could start climbing pretty easily. So keep an eye on those for the levels to the upside. To the downside, if we start staying below, I'd say 42,000, you want to look for that old trend there from that vertical distribution. So staying below 42, which would be basically around here, you're looking to go back into that trend, which would possibly be back into 39,000. For now, you just have a little micro distribution coming in here which is okay. That's actually very healthy after a push up like that. So staying above 42,000 here is definitely bullish. All right, moving on to oil. Oil had a beautiful reaction from this sell zone right here. We talked about that demand zone from 78 to 80. We back tested it and then just went straight down off of that bearish demand, and it went down to a beautiful level. It's the support zone of this accumulation. So if we look at those three value levels from that accumulation, the value area low, the POC, and the value area high, they all had beautiful reactions here. We had a bounce off the value area high. We broke through the POC, bounced off the value area low, and then we stalled at that POC again. So POC has turned into resistance. So staying below 72 here would be bearish. 69 is our major buyer support. So if we come down to 69, there should be some buyers there. If there isn't, there's not a lot of resting liquidity until we get all the way down to 67. So if we lose 70 to 69 here, look for 67, and then you really want to bounce there, because if you don't bounce there, there is not a lot of support until we get way down to 62 and 63. So oil has some room to fall here if we do not start finding support pretty soon. It looks like right now there's a decent amount of support at 69. We'll have to see if that still is holding for that second back test. To the upside, if we can get back above this accumulation, so back above like 73 to 74, there's not really a clear level here unless we grab a volume profile. So if we grab a volume profile here, then we can see where that value is trading. So we have a little bit of value there. I'll zoom in. We've got a little bit of value there on the low. We've got some value here on the POC. And then we have some value on that high right before that sell zone. So if we push to the upside, those are the levels you want to look at. 75 to 78 for that value retrace. All right, moving on to the dollar here. Let me move this out of our way really quick. Now, the dollar is going to be very hard to predict, obviously, because we have so much data coming out. But looking at this like we were last week, let's go ahead and grab this as our downtrend. We'll get rid of a few of these older levels here. There we go. So what we're going to look at for the dollar is right now we kind of look like an inverse head and shoulders, where we had a leg down there, leg down, and then a bounce. So we kind of have a sell zone right around this area, which is that neckline. If we break above the neckline, the next sell zone would be that low right there, which would be around 105. If we break above 105, you're looking to retest this really long distribution, which would be around 106. To the downside, if we can't get back above this little neckline right here, you're looking for that low, which is right around 102.50. Like I said, tons of data this week, so hard to predict. Keep an eye on those bond auctions, and keep an eye on that FOMC. Those are the biggest things for sure. Okay, for the euro, basically the same, but the euro is on a stronger trend here. So the euro's downtrend is actually quite strong. We put in a little bit of a gap on this upside here going into 109.9. If we stay down below this point of origin, you can see we had a point of origin right here that pushed us up. If we stay below that point of origin, which is that kind of the range high here, then we're looking for a retrace back into value, which in this case would be somewhere around 105 to 104.8. If we can stay above that, this is just a bullish back test, and we should be able to bounce back into, I'd say, like 109 to 109.5. Once again, hard to predict, a lot of data coming out, so keep an eye on that calendar. But all right, guys, this has been the summary of markets. Hopefully you guys enjoyed. Make sure to hit that like button if you did. Make sure to subscribe if you guys are new. I will be streaming Monday through Friday, 9:30 in the morning next week. So I'll see you guys then. Peace out, guys.